Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. I always freaking forget. To open the mic. Okay, so yesterday we had down move, it reversed. This looks like a speculative trade to me. JP Morgan had a note out saying that you know, they still thought that the effects of policy are lagged, that could push us into a recession and then yields would have to come down, and therefore now was a good time to buy. So I think that these flows were speculative buying, and it's extended a little bit overnight. You come over here into the S&P 500, some interesting things happening in the S&P 500. It doesn't look like too much from the chart, but there was actually some pretty heavy rotation in the individual stocks. So like the large component stocks like Tesla and Apple and so forth declined 3% compared to like the smaller caps. So, and there is a rebalance this Friday that is playing behind that. So there's all sorts of chaos going on in hedge fund land. There's oil. Oil is still, you know, holding the highs from last Friday. Silver and gold have recovered a little bit. And copper is not looking so hot this morning. Oh, copper. Copper continues to astound. Here we got Bitcoin. Bitcoin had a little bit of a jump yesterday, but they quickly gave that up. The thing that drove that was former CFTC chairman, former saying positive things about it, that like, oh, well, you know, these ETFs, these people are putting their names behind ETFs. That's like a big change. Well, okay. Doesn't really matter though, I think. And then we got the dollar all the way down to 101.5 right now. So the dollar coming down quite a lot. And that's probably the biggest change in the market that we've seen here, is that the dollar has been weak the past few days. So that's where we're at. The treasuries did have a little bit of selling here on the open. They've bounced. I do not see anything to explain. I don't know why they're moving. So yeah. Well, so I thought today would be a relatively quiet day, but that kind of action going into the open and everything is kind of making me wonder here. So I was coming in and thinking, well, maybe we could do a little bit of work on these back tests and stuff. Let's make sure that we have our news squawk going here. Oh, we do have at the top of the hour Bullard, who has been hawk. We have a 52-week bill auction, 3-year no auction, and that's basically it today. So we're gonna want to watch the shorter end of the curve here. Since that's probably the biggest sorts of flows that I'm aware of, at least, is the possible hedging flows from the auctions. So are we going up or down? I don't think that I have a really strong reason to think that we would go either way. I mean, the issue, so I think that generally speaking, the hedging flows from the auction, you kind of have to guess a little bit with auctions. Unfortunately, we don't get a whole lot of good research at this time about what the auction is likely to be like, but there's a lot of chance around it. But the theory that we've been running under is that, you know, we're be getting a lot of issuance, and there's going to be a lot of quantitative tightening, so the Federal Reserve isn't going to be buying as many treasuries, and so I'm expecting that on these auction days this week that we're more likely to sell. Okay, but we have this buy flow that's been coming through since yesterday, may still be out there, and I do think it's a speculative trade that the JP Morgan and clients are going long. So we have a little bit of information that we could maybe try to put a speculative trade on, but I'm not confident enough in my own prediction of the flows at this moment to want to step in and take a trade. It kind of looks like those buys are coming in and being pretty dominant here after that selling. And I don't know what that selling was about. That's kind of the thing that's missing. I mean, when did that really start? It was like 15 minutes ago? And there really hasn't been any key news in that time period. Be a noise trader today? No, just don't trade it. Let them show their hand. See that if there is a big ol' informed trader out there that has to hedge his portfolio or do something related to an auction or something like that, he is desperate for you to come in and start taking trades without knowing anything about what's going on. Don't let him get away with it. If we all just sit back and don't do anything and don't provide the activity for them to work with, they're gonna kind of have to show their hand, right? And it will, you know, the less that the noise traders get involved, the easier it should be for us to see if he's actually doing something. I've been waiting for. Well, yesterday they certainly did something right, but I wasn't privy to that one, unfortunately. But come on. In a profession where performance is measured in 5 to 10 years, we can't concern ourselves too much with a few days, right? Hey, Adam. Any market, what do you mean by market need? Now, the thing on the other side is on the equity side, right? This rebalance is seeming to have pretty significant effect. Oh, any news? It seems like there could be news in in the treasuries, but I don't actually see it hitting any of my news squawks or anything. So the over the weekend, I decided to get into. Oh wait, sorry. Let's answer the questions first. I asked yesterday if it's possible in futures to place a hedge. Oh, well, no. So again, the way that this works is when you buy, you have one contract. You're long that asset, and then if it moves up or down, you're making or losing money. And then if you take the opposite trade, you're offsetting your position. So you can't just buy and sell the same asset and it quote unquote hedges you. And that's the same for any asset, right? The way that hedging works is you have to be buying and selling in two separate but similar securities, right? Now, can I buy and place a sell order once it reaches? Yes. Okay, so let's talk about order types then, is I think what you really need to learn, Adam. So there are 3 main types of orders, okay? Really 2 and then a third one, right? And then there are like other kinds of orders beyond that, but retail trader typically doesn't really have to worry about them, and they're just kind of these same main order types with maybe extra low frills. Okay, there's market orders and there's limit orders. So if I place a limit order, that is an order to buy at a specific price. For instance, if I click here at 111.060, this is just a sim account, but I can place a limit order to buy at 060. And what that does, you can see over here on the left, it says one lot Q 1860. So that means there are 1,860 other orders in line in front of me. This is an estimate, but there's other orders in front of me. Okay, so if I were to place it closer, like at this 07.5, for instance, right, I would be at the back of the line with 1,000. And what would need to happen is 1,000 people would need to sell in order to fill all of the people in front of me in line and for me to get filled on my trade. Right, that's a limit order. Okay. A market order is you just take the best bid, best offer, right? So if I market buy, I buy into the guys that have limit offers at 080, right? So I'm those orders that are filling those limit orders in the queue, right? So if I buy it, I'll take the best offer at 0.8 and if I sell, I'll take the best bid at 0.80. Okay. Now the third type of order is a stop order. And a stop order is essentially an order that you can place at a certain price, and when that price is touched, it will then become a market or a limit order. So a regular stop, when that price is touched, it will become a stop order, or it will become a market order rather. Let me re-say that. So a stop buy, if I put a stop buy here at 10.5, for instance, then if price touches 10.5, this order will convert into a market order. Okay. I can also place a stop limit. The way that you do that in Jigsaw is you have to, there's this little button here that says SSL, right? Okay, now 1SL V250. Okay, V250 is that this one is a volume, it's a synthetically volume triggered one. So it won't trigger just if it's touched, it will trigger if the amount on offer is less than 250. Okay. Right. So what you do is you buy 08, right? Now you're long, and then you say, if it gets to 10, I want to take my profits. So you put a limit order. That way you're in the queue, You're waiting in line. So you have the best chance possible of getting filled if we get to that level. Right? So if that did not answer the question, then you need to go into what you're actually trying to do. What are you actually trying to accomplish? Because I think what's happening is you're asking like a very specific question that doesn't really seem to make sense. If we know what you're trying to do, we could tell you what it is that you actually want to do. He's asking if you can do bucket shop hedging. There's this guy named Nick Sean that uses this technique to make money via support and resistance. Well, okay, so first of all, market is very statistically efficient. So what these people talk about as trading support and resistance is not a profitable strategy. But if you were going to trade support and resistance, you would be putting limit orders in there, right? You'd say, here's where the support is. If it gets down there, I'm going to buy. And if here's where the resistance is. And if it gets up there, I'm going to sell. In bucket shop land, you can buy and sell the same instrument and hold it long and short at the same time. What? You definitely can't do that in futures. How it's so even in Forex, how would that even make sense? How would that even make sense? I would totally make sense if we were talking options, right? Because if there are options, you could buy the put and you could buy the call, and then you'd be both long and short, right? And then you make money on if it moves outside of that range. But in Forex, how does that work? Because wouldn't buying the asset, if you're long and then you click the sell, doesn't that offset your position in the Forex too? How would it not? If your broker allows you to do it. Okay, but then the two trades would just cancel each other out, right? Well, there you go. It's a straddle. Yeah. I don't know. What Uzi's talking about sounds like a scam. sounds like something that maybe some Forex brokers might put in there to entice you into trading a certain way that's not really advantageous to you. I would not recommend trading Forex, but bro, for real use to be able to do. Okay. Lock floating losses. Yeah, what would they call this feature? Right, this is before you realize that trading Forex isn't actually trading anything. Well, I mean, you are trading at things, but I think it's a fair criticism to call it a bucket shop, right? In Forex, they called it hedging. Okay. Sounds like bullshit to me. I wouldn't do it. Well, yeah. So let me tell you something that I've learned over the years, okay? If you run across somebody on the internet calling a thing in traders something different from what the rest of the trading world calls it, that's a huge red flag, right? Because what they're doing is they're trying to piggyback on established terminology to try and give it, make it seem more reputable. Yeah. Well, if I search about it, it will show you at, they're talking about it at Forex Factory. So it kind of, so I think maybe I understand what they're trying to do, and here's how I would do it in futures. Okay, let's say that I don't know which way it's going to go. I could come in and I could say I think it's more likely to go short. So I could come in and I could take a short position. And then I could say, you know what? If it gets above 10, I will put a stop order in, not just to exit my position. So if I'm short one contract, I'll put a stop buy. But it won't just be a stop buy for one contract. It'll be a stop buy for two contracts. So that way, if it does get above, let's say 11. Let's say I put, two stop buy at 11. So if we got to there, I would buy two contracts and then I would be long one contract after that, right? So I would lose a little bit if it went the wrong way, right? But then I should still be able to take advantage of the trend if it continues up, assuming that it actually continues up, right? Because it sounds to me like the strategy here is you want to make money out. You think it's going to trend in one direction, but you're not entirely sure which way, right? You could do something like that. I don't think that. I think that would be a little costly. I think it would be hard to really make money doing it that way, but you can do it. Oh geez, reading this post on Forex Factory just makes me because there's people being like, well, yeah, but it's a dumb idea, and explaining why, and they're like, well, you don't know if you haven't tried it. It's like, well, actually. Back when you didn't know. So, Uzi, how long before we met did you trade Forex? It wasn't that far ahead of when we met, was it? was so mad when they changed the laws here in the US so that we couldn't do Forex hedging. That's interesting. Oh, you started in late 2008. Okay. No. But when did you give up on Forex? They call it a perfect hedge. I found if you just, so we just have to search for Forex hedging. And then on Investopedia, it talks about it. This kind of hedge arises when a trader is holding a long or a short position as a long-term trade and, rather than liquidate it, opens a contrary trade to create the short-term hedge in front of the important news or major event. Interestingly, Forex dealers in the United States do not allow this type of hedging. Instead, firms are required to net out the two positions by treating the contradictory trade as a close order. However, the result of a netted out trade and a hedged trade is essentially the same. Oh, that's so effing weird. So basically they're saying that when you hedge yourself, that you are essentially flat the position, but they don't actually consider it flat. They consider that you have two positions open. I don't know why they would do that though. Oh, the year FXCM went unders when the, so it had been 2 years. No. When did we start? 2017. Right? Yeah. We're getting up on, we've been doing this a long time, man. Because most of the people that I remember when I came in that were like producing content and stuff like that are still around. So I kind of still feel like the new kid on the block. But the reality is we've been doing it for like 7 years now. Yeah, I didn't follow any traders on YouTube or anything before then. You're the first. Well, there wasn't really anybody on YouTube. Yeah. Honestly, before 2016, trading on YouTube did not exist. So you realize that when we started live streaming had only been available on YouTube for a few months. The you know, like Futures Trader 71 and Anthony Crudelli, they became popular from Twitter. Can you do a video on the Jigsaw simulator? I don't know if there's really enough there to make a whole video. I can go real quick and show you everything that there is to know. If you come over here, hold on a second. Gotta remember where it is. Okay. So if you're on Jigsaw, you can come down to here to Tools, Simulator Account. And then here's your simulator accounts. And you can choose to show them in the leaderboard or whatnot. And you can add a new one. Okay, so once you've added a simulator account, then it will show up over here. See, there's my serious, there's my experimentation one, right? I can switch between those sim accounts, and then at that point you trade it just like anything else. Now, you can place those trades in the sim account without having the live license. So it's like $50 a month for a live license. That's to place live trades, but you can still place sim trades without the live license, right? And there's also, I think there's also a setting. Where is it? I think under options, there's a... Oh, maybe not. Maybe it's in here. Pretty sure there's a not. I don't know if it affects the simulator, but there's... Oh, you know, I don't think it does affect the simulator. Oh, maybe I'm crazy. I thought there was a place to say how many, when orders pull, estimate how many of them are in front of you. Anyways, the simulator is, you know, is actually more stingy than the regular market. So that's a kind of a cool thing about it. And that's really all there is to say about it. How are you today? I'm doing okay. Not that I follow you per se, you're more my... Well, yeah, for sure. I really hate the when people want to quote unquote follow you, like shadow your trades or something like that. Man, okay, so I wanted to get a watch, so I went and I got like this $50 Casio, and I don't like it. The watch itself is cool, but like the bracelet pinches your hairs and grabs your hairs. How do you choose? Well, so for the Jigsaw Simulator accounts, there's not like a size. You can just pretend that it's like infinite money, right? But it will track your performance. Because, you know, here's the thing. In futures trading, right, you take an individual trade, you make a certain amount of money on that trade, right? It's not like, okay, in other kind, you know, like if you were investing a portfolio, then the size of your portfolio kind of matters, because then it's like, okay, how many contracts of this, if I buy this, and this, how much money do I have left, right? I only have a certain amount of money to work with. But when you're only talking about taking one position at a time and, you know, day trading it, is kind of a different thing. And the amount of money in the account isn't really relevant, right? So when you're in the simulator mode on Jigsaw, it doesn't put any restrictions on the number of contracts that you can add or anything like that. After using the Apple Watch, nothing else feels comfortable. Well, you can get different bracelets for a watch. I wanted a metal one. I don't know. I wanted a metal one because I thought it looked nice, but like the thing is I'm like, well, it's kind of uncomfortable, and nobody will see it anyways. You know? Because this was like, oh, I did this one and then go get a nicer one. But now I'm kind of second guessing that I actually want to buy a nicer one. Even a smartwatch. Was looking at a Garmin smartwatch, but even then, I don't know. The only thing that one thing about this one is that it beeps at the top of the hour. I find that really useful. Man, it is really warm in here again this morning. Why is my thermostat being like this? You could never wear a metal strap. I would be okay with the metal. So I think it's because it's like it's a little warm in this room, and like my skin is maybe still moist from the shower, I guess. I don't know. That makes it uncomfortable. But oh right, so I was gonna look at the there's no way. It says that it's 69. Moist, yeah. I'm just gonna take it off and set it over here. I'll still hear the beep. I guess I'll still wear this, but it'll just be like only when I go out, right? I'm a little disappointed because I really enjoyed learning everything about there is to know about watches. You know what kind of stood out to me when I was looking at watches though? So like there's this kind of popular thing right now on social media among the kids. They call it the old money aesthetic. Okay, so what is the old money aesthetic? Well, there isn't actually any aesthetic. So what it really comes down to is when you have the money, you can afford to spend a little bit extra on everyday items in order to get versions of those items that are perfectly suited to the task that you're doing, right? So no matter what it is that you're doing, you can buy clothes that are perfectly suited to it, right? Because there are different kind of like if you're sailboating, for instance, there's different kind of needs. You're likely to get wet, so you need clothes that dry really quickly, for instance. Things like that, right? And kind of what will happen with the aesthetic is that things were designed a certain way to serve an ultra utilitarian purpose, and then those things kind of became the aesthetic. People associated with them with status. And so now we think that, oh, that's what wealthy people wear and whatnot, and just because that's the style. But actually, it's the reason that the style exists is because of there's some history behind it. Like with watches, like why does a Rolex look the way that it does? Well, because that's what you had to do in order to make the watch waterproof, so that you could have like these diving watches. You have to have like the big circular bezel that goes on top and really screws down hard. There's no way that water can get in it. So I thought that was interesting. And watches are an particularly interesting case because it's something where there was a very strong utilitarian use for it, and now there really isn't anymore. Now everybody has a watch in their phone. There's literally no reason to get a watch other than for style. But they continue to, I mean, there's a few watches that are made that are just to look cool, but overall they still continue to hold the utilitarian use of it. I find that really fascinating. And it makes me think, oh, what other kind of things out there that might be useful to me, might have utility, and I just never thought about it because I didn't want to spend money, you know? Oh man, it sure does feel hot to me in here. Oh. It must just be me, because the thermostat says that it's pretty cool. Well, I tell you what, the treasury has been pretty tame here, hasn't it? Maybe we should get into, I thought I wanted to do some backtesting. Maybe we should do that. Yeah? Well, let me pull up the editor and show you what we're working with here. why are refreshing orders different in DOM platforms? Okay, so the exchange doesn't report refreshing orders, right? The exchange supports refreshing orders, says when so much of this order is filled, we will automatically put more on there. So that happens instantly. But they have not, there's not some message that says this lot was part of a refreshing order. Excuse me. Okay. So all of the different platforms are trying to detect, they're looking for telltale signs that there's a refreshing order. And so every platform is going to kind of have a slightly different algorithm to try and do that. Suddenly don't feel super great. Push forward. Okay, so here's the trade. If you've already taken too many trades, it will return. If it's not during the correct time frame, it will return. And then it'll say if we're above the value area high and our target, where does it get target from? Oh, this is saying if your target is this far away from the value area low. I wanted to change that. Cross below levels dot VAH, comma, close, comma, 1. And value area high minus POC is greater than target times tick size and is falling. And levels.POC minus levels.value area low is greater than target times tick size. And we are rising on our moving average. Oh, do you use a LAN cable for trading and have a generator for backup? Correct. So first of all, I would not recommend trading on Wi-Fi. So yeah, I have a LAN cable, and then my router and everything downstairs has its own UPS. So I have a UPS up here, and then all of my internet stuff is downstairs, and there's a separate UPS for that. Although I am considering moving it up here. I'm considering moving it up here. Okay, so here's our strategy analyzer. So I had done this one. So here's the strategy before. It doesn't do very well, right? Will it load the... There we go. Oh, no, that's not right. Is it this one? Yeah, I think it's this one. Why does that look so wrong? That's only taken 104 trades. Well, that's wrong. It's displaying it wrong. Because like this had thousands of trades in it, right? But these were the parameters that we wanted. ES9, 5 minute. Shouldn't need tick replay. Let's just come in here really quickly and turn off the sound so that it doesn't like scare y'all. And run that. Yeah, I muted myself again. Okay, so the issue I'm having here with what I just saw on my back test here, it was taking it from the value area low to the value area high, but it didn't take very many trades. Only 104 trades over a dozen years isn't good. Not enough samples. So I'm going to get rid of that other qualifier and see if that gives us more like 1,000 trades. So we really should be able to get more than the ones that we had before. Okay, so that one took 342 trades. Let's... Or to 80, increment it by 4. Now that's so weird that they get so few trades now. See, like, okay, so here's the one. Well, that one doesn't make much sense either, though. Oh, wait. Did I program this wrong? Does it need to be like this? Only good combining with other conditions. Okay, if it only results in 200 trades, then it does. All you're doing is... I don't think that I'm backtesting this correctly. Because we need 1,000, over a dozen years, it should be giving me more than 1,000 trades. Okay. When you're taking something that only takes like 250 trades over 10 years, and then you add other filters on top of it, right? All you're doing is just reducing your sample size to ridiculous amounts. Okay, that did change things. The Sharpe ratio was terrible, though. The Sharpe ratio was terrible. Yeah, I'm still kind of stuck at why does it take so few trades? What is this using for target here? 44. Okay, so if the close crosses below the value area high, and the difference between the value area high and the point of control is larger than your target, enter short. Same here. If the close crosses above the value area low, and the point of control is less than the level's value area low times something. That all seems correct. I'm going to take this bit out. Then it really should just try it every time, regardless of how far away the target actually is. So I should be able to go back onto my chart here and see every time that we cross that value area high, it'll return back to it. Now, the issue with that is that it won't be factoring in like needs to have started below it for the day, but well, that's better. I'd still call it random, to be honest with you. I mean, over that large of a sample. Okay, so if you're talking 3% on 1,000, right? You're talking about a difference of 30 trades. Okay. So over 12 years, 30 trades are responsible for all of your profits. It's not very good, right? But you get 1262 now. Chart. To the chart. Yeah, so see, like right here. Here it did it on this one. Probably should be taking one here too, right? It should probably be trying to take one right there. I don't know why it doesn't do it on the most recent day. Okay, so like right here. Why didn't it do it? Oh, maybe it was just not happening in the right time frame. Yeah. Because by the time we were over here, it never come back. Okay. That's why it didn't do it on that one. So here's the one where it didn't work. This one, it was outside of the time frame. Here's the one where it didn't work. Okay, here's one where it did work. Yep, they take it right there at the value area low, and they traded it all the way across. Here's another one. It didn't get a very good entry, but well, that's a little bit better than the one that I was doing, right? Because the one that I was doing had a profit factor under 1. It's taking about the same number of trades. So I think we can adjust our video to that. We could also increase the time. Like we could say end time 10. 10 o'clock my time. The Sharp ratios on these are so terrible. Interesting. Well, that one, it kind of seems like it's okay, but that didn't really start doing well until 2018. See, the drawdowns on it are terrible. My gosh. $18.17. That's a little better. So one of the issues that I'm having here is that if I fill order resolution high and I go to like a 30-second, and what are the parameters that work the best? 56, 1 to 1. Well, let's just do this one. Oh, you guys probably don't hear the music. That's okay. Maybe I'll leave it on then. Okay, yeah, so coming back over here. Fill 30 seconds. So I think that if you use a real more granular fill resolution, that it's gonna look even worse. Well, but the question is, why use it for trade location? Right? What evidence do we have that that using it as a trade location has any kind of efficacy? Right? Like this is always the defense I hear when we're talking about some sort of strategy, because these almost always come down to a particular price level, and it's like, well, okay, yeah, but like all of my edge comes from not the price level itself. Well, okay, then why is the price level necessary? Like all I'm saying is let's do a back test where over 5 to 10 years with a sufficient number of trades within that time frame that it shows us a Sharpe ratio over 0.5 even. Right? Why is that such a big ask? So this should take a while because it's trying to get granular 30-second data going way back. Because the data we get is crap. Yes. Well, but that's the whole thing is, oh, you know what? Let me put it in the Discord here. Upload a file. And documents. Oh, it finished. Oh, yeah. It's a lot worse. Oh, actually. Oh, no. Wait, what? Okay, that doesn't make much sense at all. We'll look back at that in a second. Okay, then the actual cache file. Okay, so if you go into Discord in the downloads channel, you will see the indicator so that you can mess with this yourself. Okay. Okay, so why when we did it this way, with the higher fill resolution, did it take so few trades? Can you make an indicator on Ninja? Well, so there are kind of things that give you a lot of flexibility, but really you should just code. You should just code it. It's not hard to learn how to code a simple indicator. Oh, you know what I bet it is. Go back to summary. No, analysis. Yeah. It's only taking trades starting from 2022 because it won't give me 30 seconds. Okay, so what if I just did 1 minute? Will it go back that far for 1 minute data? I would think it would if it let me go back that far for 5 minute data. Okay, so that's better. It takes the same number of trades. It does change the results a little bit, but not too much. So I think I can not worry about that. By the way, are we doing commissions in here too? Yes, we are. Okay, so the next thing is let's come in here and let's backtest the reward factor. 0.25. I'm going to go all the way to 4 and increment it by tiny amounts. Maybe if we're using a good risk reward ratio that we can get the Sharpe ratio up. Coding is hard. It's not. You just look at other people's code and then you copy and paste parts of it. That's all there is to it. And I have a bunch of videos to help you understand what you're looking at. This seems to be going okay for 320 iterations. watched on that deals with properties and loss rate goes from 0 to 100 real quick. What are you talking about? Well, they're still selling it here. Seems like we're getting like a real trend now. S&P 500 so far for the first 15 minutes hasn't been too happy either. This is one of the worst opens we've seen in past like 3 weeks, I'd say. They've almost always kind of done a little bit better than that on the open. But the way that it's been going, it'll bounce back up, right? So let's not get too hasty. Oh, well, no. No. So you are able to get it to look pretty good. Oh, no, now it won't let me do... Oh, what's this? Wait, what? Huh. Oh, is that because I have this on? Yeah, standard. Okay. Have to do it all over again. All 300, this one should go a little bit faster though, because I'm not using the 30-second data. Yeah, it's a lot faster. It looks pretty heavy. It's not like there's not buyers, but it looks pretty heavy. There in the 10-year. We are seeing some movement in the dollar with the dollar moving up here. Hello, Gus. Oh, we're running through our back tests here. Well, I kind of thought that maybe the code that I was using, the strategy that I was using, was not the best test. So it changed around. I'm doing a much simpler setup based on the value area low and everything. And it's not bad. I'm actually able to make it profitable, but it's not very good. It's not worth trading. But we were messing around with a couple of different things. So this test should, I think, give us a much better idea of, you know, can you actually get it to work? Almost there. Watch the on-market depth method. Did you watch the one where I talk about the key functions? Yeah. Okay, so with that one, oh my gosh. So this is exactly what I'm talking about. Oh, interestingly enough, a reward factor of 1.25 and a target of 56 seems to work the best. Still. My gosh. Gross profit and gross losses are pretty insane. Okay, so when you come over and you look at this, okay, so we got a average win to average loss ratio of about 1, which is what we want. It's a percent profitable above 50%, so that's not terrible, right? The probabilities on these aren't the best. Well, they're better than a lot, but they're not. They're still pretty low. I guess R squared of 0.76 isn't bad. But the Sharpe ratio is terrible. Okay, well, so then what you have to do is you have to say, no, you need to watch that because it's that one that's like key functions, because then you understand. But basically what you have to do is you have to say value of 0 equals the value they want, and then here on up. My gosh. So if I were to show you, for instance, this one, I think, no, what would be a good indicator to show you? No. Let's just open up an indicator that you'll have on your machine. SMA. Okay, so here's SMA. So you need to add plot so that it can actually has something to graph, right? Then you do all of your calculations, and then you say value equals value of 0 equals, and then your calculation. And then it will put the piece of data into the plot. And that's it. Yeah? Cool. Okay, so this one is, I think, a lot more like what I thought it would be. Like, maybe profitable, but not really very effective. And a period about the time that I was trading where it doesn't do well. And pretty ugly pullbacks. Yeah, it's that easy to make an indicator. Like, really, just go back and look at other, built-in indicators, right? Find something that's pretty close to what you want, right? Or that displays it the way that you want, and then you look at those things. Look at what settings they're setting in here. Well, they don't really have anything set in the set defaults in this one. They just add period, which is a property down in here, right? You have this period. That's it. And most indicators will be just some variation of SMA. This one is an overlay, so it you want it to display below in some sort of a histogram or something, then you don't want to use overlay on, right? I want to come in here into trades and check. Stop loss. Okay. So these ones that are closed position are a little suspicious to me. These are ones where like the difference between the value area high and value area low must be relatively close. And I don't know if you really want to count those ones or not. Okay. Okay. I think the one thing that you could criticize on this, though, is that that doesn't necessarily show you the scenario where one is like clearly. Okay, this one it tried doing it twice. You know, you want this situation where like it's clearly away from it and they try and go for it and then it, right? You can see like the amount of times that it doesn't make it back is actually, well, that one, I'm also not setting the target to be the point of control. So what I could do, let's try this. Let's see if this changes things. So I think what you want to do is get rid of this. Oops, my headphone cord got stuck in the keyboard there. Calculation mode dot price, comma, underscore levels dot POC. Okay, and then bar, no. I don't want to delete those lines. I just want them to be commented out. thing. Dun, 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 dun. So let's see here. Normally, we would be saying the target equals my stop times reward factor. But now we're going to say target divided by the reward factor equals your stop, right? Divided by size. Oh wow, it's already been another hour, huh? This is one of the reasons why I kind of avoid backtesting as much these days, is because it just like the time flies and you waste so much time. Okay. This might just like completely screw everything up, so. Oh. I still kind of stuck there after that last little move down, huh? Has been a quiet day. Okay, that seemed to compile. So let's try it again. No. So it won't let me use anything less than a 1-minute time resolution going back more than 2 years. So we have to just use the 1 and 5 minute resolution on things. I did kind of test it a little bit, and it kind of suggests that the difference that you might be getting from the tick resolution is not significant enough to really change our result. So if we really want results that are as accurate to what would happen live as possible, though, we should use tick resolution. Should use like a 1 tick chart underneath or whatever. Halfway there. I'm going to guess, though, that this is going to make it worse. Usually when you add more risk management to it, the results get worse. Contrary to what people will say. Well, you're adding fat tails to it, right? But usually the net profit is usually less. Financial Times: Republican presidential candidate Ron DeSantis' fashion choices indicate his lack of political identity, writes the Financial Times' Robert Armstrong. That is the most... Oh my gosh. I gotta retweet that one. Tweet. Okay, so our average win to loss is okay. I've seen a bunch of people use standard fill, and it shows that you make millions, and then you run it on tick, and oh yeah. Well, so the shorter term, the shorter the term of your trade, the more that the tick resolution is going to matter. So if I'm taking them on 5-minute bars, then those sorts of things aren't really such a big deal. But like, there's some people where they're like doing these trades where like it literally only makes a tick. Or like I've seen things where guys like it wants to make 1 tick and it has a stop of like 4 to 16 ticks. And then the tick resolution like really, really matters, right? Because in that situation, a lot of those trades, you're like not even going to get filled, right? So even if you did it with tick replay and it showed that it was profitable, you still might have issues translating it over to live because of your position in the queue. that is really interesting. That so let me see though if it's actually working correctly. Let's just look at a couple of example trades to see if it's working correctly. Buy. Oh, that one it tries to buy, but it's so this is kind of where these sorts of things kind of come into play. Is like it'll only take the trade after the 5 minutes. So basically, it ends up taking the open of the next candle. So here you can see it crossed above it, right? So it takes the open of the next candle and ends up taking the stop loss, right? Same here on this one, and same here on this one. Although this one, it got the profit target. I want to come into here. Trades today. Trades allowed. 2. So why did this one take 3? Ooh, that really annoys me. Why is that? Why did it take 3 trades that day? Probably it should just be like if you've had a successful trade, it stops trading for the day, right? That might help it. Oh. Oh. Interesting. Yeah. This strategy just performs absolutely terrible with those added conditions. It's just terrible. But this kind of comes back to this. So if you look at the distance, the difference between the value area high and the point of control. Like, so before we were putting a qualifier where like it had to be bigger than a certain amount for us to even think about taking it. And that didn't work very well. Yes, Jared, that's exactly what the strategy is. When price closes back inside the value area to enter and take profit on the point of control. Correct. But what I'm saying is what we had before, all of this bit right here, we didn't have that. So it just said if you are within the value area, if you enter into within the value area, then take a long or a short. And then the targets are based on, you know, set profit targets. That performed better. That's where you get this. That one's interesting. Oh, my music died. Let's just do it like this. Open a new strategy analyzer. Come on, come on. Well, that's not right either. Oh, know why? Because I didn't compile it. Oh man, that AC turns on. It feels nice. There we go. Okay, so when you do it that way, when you just have a set target, which is in this case 56 ticks and a reward factor of 1.25, 52% profitable. As I always say, if you get like 55% profitable, then it's like, wow, that's amazing, right? So this is where it's like it appears profitable. If you did the tick resolution, that doesn't appear to ruin it. But when you actually look, when you really dive into it, you kind of realize, okay, like, look, didn't perform very well. It was only until like the 2020 bull market that this has been doing really well. And then you come into like some of the stats and you're like, well, okay, 2,000 trades isn't bad, but that is over a 10-year time period. So that's only taking a trade like what? Average number of trades per day, 0.59. So every other day, right? And the Sharpe ratio is just not very good. And all of these other things, when you look at MAE and MFE and stuff, those all look pretty standard, I would say. Pretty random. Yeah, that's a little random looking. But the drawdowns are not very good. There is an issue here where there are 2 times where it took 3 trades for some reason. Those ones may just be that, like, the tick resolution. What do you guys think? Is that fair? Is that a fair test of it? Just if we cross below it. Before we were saying if the close is above or below those value area, those levels, and you get some momentum going down, then it would take the trade. But that one was not profitable. Whoa, what? Okay. I have to like put a huge disclaimer about what I'm about to say, okay? This is rumor. I cannot confirm this, but this is a pretty massive game-changing political headline, okay? This is from Toby Young. Rumors circulating that President Biden is due to announce he won't be contesting the 2024 presidential election in a CNN interview this weekend. Newsom's odds of being the next president are climbing on the back of rumors. It is like just makes my head hurt trying to think about anybody that would think that Newsom should be president. I'm not sure I believe that rumor. I'm not sure I believe that rumor because why would he announce his candidacy and then like within a month say he's not going to contest it? That makes zero sense. That was this morning, about 2 hours ago. Let's come in here. 24 hours. No, I'm not seeing a difference. Newsom is 13%. Not only that, but it seems very uncharacteristic of Biden. Zero Hedge reporting it. Well, let me come over here. I'm going to open up a private window here to see Zero Hedge. Oh, that's right. I can't see nothing without logging into Twitter now. Oh, that's annoying. Okay. You'd be interested to see if Zero Hedge was in on that that rumor. So I was seeing it from Jordan Peterson. Saying, oh, well, it would be Gavin Newsom. That would be terrible. It sure does seem like Gavin Newsom is running for something, doesn't it? But if he jumped out, then it would be like chaos, man. The one thing about this is that it's taking it like any time that it comes to that price level during the day. So like it's not filtering for we start the session above the value area high to begin with and it's coming back. You know what I mean? So you might be able to filter a few of these trades out based on that. And also the fact that when I come in here into the trades and I see some of them that are just closed position, there's way more that are closed position than there should be. That should like almost never happen. That means that it took trades both ways, right? Anyways, I'll update. Let's update here in the Discord. You guys have until this weekend to contest the results or make a better one. What am I doing here? Tools, export. Crap, what did we call it? Val return. Yes. Okay. Close that. Check to make sure that we didn't like eat up all our memory doing that. Might need to restart NinjaTrader because sometimes there are like memory leaks, sort of a thing that goes on with them. Oh, we're only using 2000. I think we're okay. Can ARC continue climbing? Oh, you know what? We should check. We should check on rare earth resources because they had another little jump yesterday. Little jump. It was a huge jump, really. But question is, can they keep going? Situation should be able to continue to bring interest to the stock, but you don't know for sure. Oh yeah, they're heading for $1. So the treasury is balancing back and forth there at 07, but I was starting to see maybe some hints of it looking a little weak for a second. Maybe it wants to go somewhere. So you know what? On rare earth resources, I'm remembering now, like, what the last thing that I had seen was that the lot of the executives had bought more options and like significant amounts of options too. And we're like, well, it doesn't necessarily mean anything. But now I'm kind of like, did they know this stuff was coming? Because those guys made Mondo money now, right? well, I've gotten myself into the mode of like I'm looking, I'm investigating, I'm thinking and everything, and I'm not really saying a whole lot, so I apologize for that. But there's not much to say about this market, you know. We did trade an okay range, but I would say that this was kind of, well, I said maybe there was going to be a move, but I didn't know. You know, it was kind of identified two contradictory forces, and it kind of looks like that was it, and that they've just kind of smashed in the middle, and not much has happened. Tomorrow is CPI, so we'll definitely get some movement then. But until then, I think we're pretty likely to just continue chopping around here. By the way, interestingly enough, last time we were at 4%, it was at 111.07 half year, but now that's a little bit below. Now that's like 3 basis points too low. So shows you that the price and yield aren't exactly, never match exactly. Might be able to make it back to the 09 half. Let's see. That's where the like seller average position is. Oh, wow. The Mission Impossible movie is getting a 98% rating so far on Rotten Tomatoes. How many? 194 reviews. I always like a good Tom Cruise movie. Well, what I want to see is the reviews for Barbie, because I've seen so much hype about it. And I'm like, we know nothing about the movie. Why are you guys so excited? I don't get it. I don't get it. I'm keeping an eye here to see if they're able to continue ticking up or if they just come back to the 07. There is a little bit of buying between the 5 and the 30. So guess the other thing I should note is that even though the open was pretty bad for the S&P 500, they've just kind of been trudging sideways for most of the session. So oh, maybe it was over here. I just had a thing that sent me a message, and I was like, oh, let's look at that. But then I'm not seeing it. I must be looking in the wrong inbox. Yeah. The same thing. Yeah, I get a lot of people. There's like a new kind of industry taking off in India, in Pakistan. It seems, where you go and you edit or do SEO for YouTube channels. But they never really give me a whole lot of confidence that they can do what they say. You know what I mean? There's a decent amount of activity on Twitter this morning, though. Not so much in the trading world per se, but well, what's this last thing from Brannigan Barrett? If ARK is breaking out, it tells you a lot about breadth in the markets. It is starting to improve. Keep a close eye on this stock as a proxy. When it bids, the broad index only has one way to go. Yeah, I don't know, man. That fund has made so many bad decisions lately, though, that like, let's go and look at it, though. How is it actually doing? Oh yeah, that video about trading the news, dude, I go into so much detail in that. That's one of those videos that like I'm really disappointed that it didn't do better, because that one was like I wouldn't call it my magnum opus, but for the time it was. It's also a long video, and I go in, I show you individual trades, I show you like all of the kinds of situations that you might run into news. It's like a way more detailed talk about how you're trading news than you would typically get into. So yeah, it's a really good video. I think that and the order flow video series, those are the ones that, you know, I would watch. And then the rest of them were kind of more more general advice and like getting started videos and stuff like that. But like if you're looking for like the information where you can really develop edge, those are the videos, right? Oh, so we're pulling up Arc here, right? Okay, I'm getting myself to falling into a bad habit of not sitting up straight in the chair. Maybe I need a new chair. Been trying to develop a framework to start trading central bank decisions on my own, but I've been struggling to find information. Well, I don't know if you want to. So I usually sit out on the FOMC day. That one is so volatile. I think that in some instances you can, get something big out of it and that sort of a thing. But the problem is the amount of risk that you have to put on to do it is not worth it usually. I would rather trade like the aftermath, like the next day, for instance. Is ARC Innovation ETF? There it is. Oh, okay. It's considered a fund ETF. I mean, okay. That's interesting. The ARC has done well the past few days. It's interesting to me that people are getting so excited about it, though. Yeah, that's one of the main concerns. Well, so, so let's just go into this thing that I talk about in a lot of the videos. So you have to realize that it's the orders that move the market and not the fundamentals. So people think that, oh, Federal Reserve comes out, makes a decision, and then everybody takes that decision, does some sort of calculation, and determines what the correct interest rate is now. And then they move towards that location, right? That's generally how a lot of people think that the market works, because they're told that the market is efficient and informationally efficient. So like the current price should factor in all available information, but it doesn't. It's not even close to doing that. So what really happens is the news comes out and then people say, okay, based on this, do I need to buy or sell, right? Because maybe you have a position on already, and because of that position, it's going to move against you and you have to get out to avoid the loss or something like that, right? So there's a certain number of orders that are going to buy or sell based on that piece of news, and we can try and predict that. And then, there's a bunch of other people that are speculating, so they're just trying to predict what other people are going to do, right? So when you have a Federal Reserve day, there's a lot of orders that get executed on that day, regardless of what the decision, whether it was a hike, a cut, unexpected, expected, nothing. There's going to be people who are going to trade, and then there's the press conference on top of that, right? So what happens that day sometimes can completely contradict what the real fundamentals were from it, or they can just like really exaggerate, like Powell says something and then it causes a really strong exaggerated move, right? And then the next day that move can like completely reverse, right? So why? Well, it's because of the orders, right? So what we're looking for is a situation where we can really effectively predict those orders. So if for instance the Federal Reserve comes out and like really surprises the markets, one of my best trades was when the Federal Reserve came out and really surprised the markets, right? And then like I knew which direction it was going to go and I could just trade in that direction, right? But most FOMC days aren't like that, right? So I stay out. You've got to be in a situation where you can really strongly predict the flows and the volatility is not too much. And usually those and non-farms are often too volatile for us to play in because of that. So well, okay, so if you think that the Federal Reserve is going to hike rates next meeting, then you would probably want to go short the Treasury. Short the Treasury, long interest rates. And the dollar probably long. Because a higher interest rate will actually tend to strengthen the dollar a little bit. Although with the dollar, it's complicated. Okay, but here's why I say long the dollar. So if the interest rates are higher, that's going to attract more capital. Essentially, there are more funds like, and these ones we're talking about, like pension funds and so forth, right? That are going to come bring their money to the United States to get those better yields. So especially if the interest rates are higher relative to, say, Europe, for instance, right? Then that tends to be a positive for the dollar. That's why when we had this whole period in 2022 where inflation was really high and the Federal Reserve was extremely aggressive in interest rate policy, the dollar remained high through that whole period, right? But again, it's the orders. So sometimes you can see some strange situations where the dollar will get weaker or vice versa or whatever. Because it kind of matters, like, what is it relative to the rest of the world and these sorts of things. And what's this? Second-hand watch prices are falling, pulling the values of Rolexes and other well-known brands downward and unwinding a rally that brought prices to records during the COVID-19 pandemic. Yeah, that is what I have noticed. So I was... I want to show you. I'll show you. Like, I was looking at, like, watches. If I can just go to, like, my local area. I thought this was really interesting. So I was looking for Citizen watches because I just think they look freaking cool. Those are not, like, investment grade watches, okay? Like, they're known as quality, but they're not known as ones that, you know, are collected and hold their value, right? So most of these watches, you're talking about like between $500 and $1,000, right? And when I come on my local classifieds, except for this one, which is like a brand new one. Okay, so first of all, 580 is a lot less than you would be buying it at the store. I think that one's more like 700 or 800. But most of these are like, you know, 150, 200. Right? Or we could go to eBay. Let's look for a Skyhawk specifically. And auctions. Well, there's a couple of auctions that are like really low. Let's change it to no, that's not what I wanted to do. Completed items. There we go. Okay, so they're going between 200 and 300, right? But that's like almost half of what they go when you buy them brand new. I kind of like the ones that's just got like so many numbers and stuff going. I'm sure that most people would like hate that because it seems like the watch collectors like simple, but I just think that's so cool. I think those all look so cool. Yeah. Anyways, interesting that the watch market is. There's a lot of markets that it seems like they've been able to like hold out. Like people hold out. Like they know that, oh, you know, markets come and go and. But I think what happens and what they don't realize is that most people get forced out of the market, right? So I guess if you want to go and find a nice watch, maybe now is a good time, right? I bet you could even get like, let's see. Yeah, you could even get the titanium ones for a reasonable price. What's with this one? Like the vibe. Oh, thank you very much. So we only trade. Actually, now it's time to shut the stream down. So right here early. We try to, I try to keep this as of course we talk about different things, right? But the main objective here is to collaborate and try and find trades, So take the information that we know, try to predict future flows, find a situation where we can take a trade long or short, right? And I might not always explicitly say what I'm thinking of doing, right? Whether I'm thinking of going long and short and everything, because I don't want people to follow my trades or to mess around with this. But I will point out these are the things that we're looking at that might drive flows that day, right? So my hope is that you'd want to come in every day, unless you just can't stand me, which is okay. I'm a guy. Not everybody likes me, but I appreciate that you've enjoyed the stream so far. Okay, well, I am going to get going. So I will see you guys tomorrow. Don't miss it, because be here bright and early, guys, because that CPI is important, right? I don't think that we're going to see any big surprise in it, but it's still a big event for the market. So talk to you guys in the meantime. Stay excellent, team.